The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we're going to talk taxes. And we got a special guest today, so you're going to really be smarter than the average bear at the end of the hour. So the first part of the show, we're going to talk about the tax law changes. You know, we're approaching the midpoint of the tax year. I mean, it just blows my mind that July, you know, we're into June. July is halfway. And so I wanted to make sure I get these tax law changes out to you because you got to make decisions based upon what you know. Then the rest of the show is going to be devoted to cross-state funding. Jesse Myers is with us in studio. And I'm going to tell you, if you're somebody that's wanted a home and you don't know what to do, Jesse can help you to get the best mortgage rate and to help you with your credit so you qualify. Because what's happening as interest rates are going up makes it more difficult to qualify for a mortgage. So that's what's coming up. That's a little teaser. But all right, I'm going to quickly, and I got Chris Fabian and Tiffany Fabian here. Hey, Tiff.
Hey, happy Saturday.
Happy Saturday to you. Hello, Christopher.
I took the puppies for ice cream before this, and so they are happy and probably content just lounging right now, you know?
But no Chris is there?
I'm here.
Okay, I didn't hear him. Okay, so I'm going to quickly go through the tax law changes. And of course, if you have any questions, you can call us at the office at 632-7886, but there's a lot of them. So tax brackets are indexed for inflation, which means you're going to pay less taxes with your income being spread over a lower bracket. So you would pay less taxes on more income. Capital gains are 0% up to $89,350. Married joint, $41,675. So if your income's under that level, you pay 0% on capital gains. Standard deductions are increased to $27,700 married joint. That's $30,700 if you're married, filing jointly over 65, which means a lot, especially if you got money in an IRA and you'd like to take it out tax-free. So you want to talk to us about that because that's another big change. Residential energy credits are up to $1,200 per year, and it's called the Energy Efficient Home Improvement Credit. There's all kinds of things that are in there. Used to be $500 lifetime. It's now $1,200 per year. The Clean Vehicle Credit is available up to $7,500 if the purchase of the vehicle is less than $55,000 on a sedan, $80,000 on an SUV, van, or pickup trucks. You have to have income under $300,000 married joint, $150,000 if you're single, and you have to have two criteria to get that credit. It has to be made with certain minerals, and the battery component has to qualify for certain rules. If that's the case, you could get the full credit. Otherwise, you get half of it. The new 1099-K form is absolutely going to be in play this year. So if you're somebody that's got third-party pays like Venmo or something like that, and you're getting money, plan on paying taxes as a self-employed person, okay? The new RMD, you have to be 73 now to have to take money out from your required minimum distribution, and they reduce the penalty if you don't, down to 25%. And if you fix it right away, it's only a 10% penalty, so that's a good thing. Contributions for pensions and IRAs, again, has been indexed for inflation. The IRA now is $6,500 if you're under the age of 50, $7,500 if you're 50 or older. The pension saver credit, this is a big thing, is now up to $2,000 married filing a joint return on income up to $73,000. That's a big thing.
Hey, so you can breathe for a second. With Biden and the team pushing the debt ceiling and passing the bill, does that mean part of it was less IRS agents or pushing that you're pushing?
I'm getting there. I'm almost there. Okay. Adoption credit increase, kiddie tax, has been that's when you push money to your kids so you think you're going to save money. It actually means that they can pay at the higher rate, but actually they've now made that so less of it's taxable. Up to $1,250 is for your child is tax free. So that's another big change. Let's see what else. What do you got? Student loan interest still $2,500, but it looks like the student loans are going to have to be started to get paid in October. Standard mileage rate is now increased to 65.5 cents a mile for business, 22 cents for medical. Long-term care insurance is higher threshold deductibility. HSA have higher limits. Deductions for self-employed people. Bonus depreciation is no longer 100%. It's now 80%. Expensing, you can do 179 up to $1,160,000. Meal allowances are now reduced to 50% for business. Payroll taxes, you will pay FICA on income up to $160, $200. So that's a big change. Estate taxes are $13,100, and you can give up to $17,000 per person per year without having to do a gift tax return. And under this debt ceiling bill, it puts unspent COVID money into the economy, thank God, and it reduces IRS funding. So there's less agents to do some of the things that they had already planned, like going after people who owed money. So, and then let's see. Oh, and it requires able-bodied adults between the ages of 18 to 49 to work in order to receive help from the government, and that's part of it right now. So I just wanted everybody to know. And if anything tweaked your interest, you can call us at the office. You can call us here, 803-0930, 803-0930. The bottom line is, especially when you take a look at that standard deduction for seniors, you can take a lot of money tax-free out of your IRA and put it someplace else.
Yeah, and every week we put our radio show on the website too, so you can go to egtax.com. Right. Because that was a lot of good information. I almost feel like you need to repeat it all.
Well, but I'm gonna put it on our website so that it's there for everybody. But the thing is, it's almost half of the year. I know it feels like tax season just ended, because it did, but almost half of the year is over, and so if you're going to make some moves, you want to make sure that you do it as soon as you can. And again, I'm Esther Gullius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone, and we can talk about taxes, but since we have Jesse Myers here from Cross State Funding, we're going to talk about mortgages and credits and all those kind of things on the other side of the break.
And we got Mike
thanks for listening.
And we got Mike. Mike is holding.
And we got Mike holding.
Mike on the other
All right,
side.
I'm going to take a short break. We'll be back on the other side with your questions.
We are family. I got all my sisters with me. We are family.
And that's right. You are family to us at EG Tax. You know, we're here to help you with whatever you need this wonderful Saturday, cooler Saturday than what it's been.
You were in the backyard trying to put up a gazebo, right?
Yeah, having fun with that. Yes.
You think the instructions are wrong, right?
Yeah. We did get a text in. No, you cannot take money out of your IRA tax-free. It depends on all your other income. If your income is low enough, then you might be able to take more out tax-free. If you think...
And that law didn't change. Go on, Chris. I'm sorry for stepping on you.
Oh, that's all right. It's always been there, but if you think you can, give us a call during the week at 632-7886, and we'd love to run your numbers to tell you if you can or if you can't.
So break down what Esther meant by that, why that person would have gotten confused.
Because if you're on Social Security and your RMD is only $10,000 and you're married, you probably can take out another $10,000 tax-free out of your IRA. So why wait? Take it out now and put it in the bank.
Yeah. So Esther's just saying to be
proactive
with what the standard deduction is. And so there might be some tax-free money for you to take out of IRAs. And nothing has changed on that, just her making you aware of it. And to remind you, I think since we're halfway through the year, right?
Right. And before we get to Jesse, Mike's been waiting for a while. Let's get to Mike from West Seneca. Hey, Mike.
Actually, I wait longer to talk to my bank, but this is all that got to do with what you people have been talking about recently on the beginning of the show. When do you have to pull money out? By the end of the year, the 31st of December, if it's required?
When how old are you?
Oh, this isn't for me.
For
I'm
somebody
arguing
else.
With somebody else.
So
Okay.
for their RMD. Chris.
Okay, are they just turning 73?
Actually, just turned 72, so they moved it to 73, correct?
Correct.
So if they're just turning 73, they could either take it out.
But they have to April 1st of the following year, they turn 73 to take out their first distribution. But if they wait between that January, February, and March period to do it, then they have to take out their second year distribution the same year. So they really should talk to their tax person to see what's better for them, to take it the year they turn 73 or wait to January, February, or March of the following year.
But if they wait to the following year, there's two that they're looking down the barrel of taking.
Oh, okay, understood. Now, isn't this IRA 401 at 403, are they all basically the same for rules taking money
Yes,
out?
sir.
Okay, and there's a required minimum. You said they raised, at the beginning of the program, they raised, what was it, the amount that you get taxed on? Or
The
that you can
standard
take out?
deduction went up.
Yeah, so that means if the standard deduction went up, that's good for people. That means that there's more money that they're giving you that you might not potentially have to pay taxes on. So it just gives you a little bit more freedom. They're loosening the noose a little bit.
Okay, the whole thing and the argument about this was wanted to buy a new car, not me, she wanted to, and I was saying if you take too much money out, you have to pay tax on it, and you guys were saying if it's still under that amount, she may not have to pay tax on
Correct.
it. Can she borrow money and pay it back with interest to her own account?
Only if she's still working.
Okay, that throws that out. Anything else that
But
you
she could
might be able
she
to
could
put
get
in?
a loan. You know, I think there's some good car loans at decent rates. So maybe get a car loan. You know.
Yeah, I would have her call our office during the week, and we'll run numbers for her to see what the best course of action is.
It's kind of a tough thing when I try to tell her what to do. See, we were married before. We still get along, and we
That's
go to
good.
weddings out of state. You know, we ride together.
Yeah.
Just don't say back off of that truck. Otherwise, you get kicked out the door. But, I mean, it's like I try to say, you got to do things right.
Yeah,
I
take your
listen
time.
to you guys all the time.
Yeah, take your time, do it right, make good decisions. Yeah. Now, did she get remarried, Mike?
No, neither one of us has ever got
Okay.
remarried. And
Okay.
for the most part, we get along.
So really, she has room of about $13,000 a year in addition to her Social Security, give or take, to take out from IRAs, give or take. So she's got room of about $13,000. Another thought is she could take some money out and get half the amount of a loan. So say the car's 30, take out, like 12 and then get a loan for the part of it. Or maybe part of it she's going to get a trade in too. So yeah, like Chris said, for exact figures, she's welcome to call our office, but there is
Just
room.
suggest it to her.
Yeah.
Okay, I will have her do that because she would probably be more prone to listen to you guys
Yeah.
than me.
There you go. Tell her Auntie Esther said.
Okay, I will. 'Cause
Okay,
I've listened to you guys for over 20 years. And
Well, thank you.
A lot of the things that you do have with your lawyers and state
Money
planners,
people.
et cetera.
Exactly. Thank you, Mike. Enjoy the nice weather. Happy holidays.
Okay, you too. Thank you. Bye-bye.
Bye-bye. Okay. And now, Jesse, how you doing, sir?
Good, guys. How are you?
Good.
This is a repeat visit for you. You've been
yeah.
on with us for a while.
Long time, many years going on now.
Yep.
Yeah.
And, and I guess you people are probably going out there, why do they have a mortgage guy on the radio when the interest rates are so high?
Right, right.
But people are still buying. I know my daughter and her boyfriend are in the market, and they can't find a house. When he finds a house, there's outbid, and he's outbid, and somebody with a cash offer comes in, and his offer is no good. They're foregoing home inspections, no home warranties, nothing like that, and so they just can't find a house. So people are still out there buying houses like crazy.
Oh yeah. If anything, it's just picked up, guys. Honestly.
Yeah.
Been telling my buyers who are kind of struggling with those loan programs where you have to roll your closing costs into the mortgage, or first-time home buyer programs that are kind of overlooked right now. I just tell them to try their best to look at houses that maybe have been sitting for a bit. Mm-hmm. Even call on some for sale by owners. See if you can talk with some people, and
I hate to say it. I'm gonna. What was it? Jerry Seinfeld, where they would always check the obituaries for apartments, check the obituaries for houses.
Yeah.
I know it sounds silly, but
Or people going into nursing homes or things like that, or friends who know friends. I know I was over somebody's house, and he told me that the lady next door was going into a nursing home, and the family's going to put the house on the market. So sometimes that's what you got to do.
Right. Word of mouth is huge right now with the competition.
Yeah.
Absolutely is.
Well, if you have questions out there for us for taxes, or Jesse for mortgages, 716-803-0930. The text number is the exact same, 716-803-0930. Tiff?
I have a question. So Esther alluded to, she said, as interest rates go up, it's harder to get qualified for a mortgage. Is that true?
Right.
So what's the logic behind that?
Just as rates go up, typically speaking, let's say your median home price around our area, low 200s, high 100s, somewhere in that vicinity. The difference in rate from just a couple of years ago, looking at low 3s to mid 3s, to now where it's high 5s, low 6s. We're talking $200 to $300 a month in your payment, which can change your debt to income ratio, and people are looking at a difference of roughly 5 to 15% in what you would have been approved for 2 years ago if you made the same money now, rather than what you'd be approved for now.
Gee, that makes sense.
It does,
makes a lot of sense.
And then also, haven't heard much about it, but I know it's out there. The people with good credit.
Yes.
Can you explain how that is?
Kind of a, I don't want to say debunk thing, but
that's what I sort of thought.
Yeah, and we've been dealing with it for a bit now. As brokers, we kind of adapt to the products a lot quicker before they hit the news.
Before you answer that, there was a lot of rumbling in the media about if you don't have good credit, you have a better chance of getting qualified for a mortgage. And so that's what Jesse's referring to.
Right, exactly, which really isn't the case, guys. Most people, and like I was saying, especially as us as brokers, because we shop different banks, find you the best program, you won't even really notice the little impact that would have on your interest rate. It's not like you're paying an additional fee like people would think because you have a higher credit score. So it's nothing like that. Banks aren't preferring people with lower credit scores right now. That's definitely not the case.
But they're not getting hit with like an extra 0.25%. It's like a flat $20 or $40 or something like that.
It's not much. It is a built-in percentage inside the interest rate, but it's not much. It just depends on your criteria, how much you're putting down, all that stuff.
Yeah, because you wanna, you wanna think in your head that the people who are conscientious and work hard and pay attention to paying their bills and went to college, that there'll be some benefit for that. You know what I mean?
Right.
You just want to. I know we were in Georgia last weekend. That's why I said happy holidays, because we sort of missed last week's show. And my half sister, her and her husband write down and budget every penny of where their money goes, and so they're very conscientious. And Esther always talks about not spending above your means.
Sure.
And so there should be some allotment for that, right?
Absolutely. The biggest thing that we noticed, Tiff, with it is that people in the mid 600s to high 600 scores, their rate is just more similar to what it would look like if they had higher credit.
Gotcha.
But the higher credit score people are still getting all the advantages. They're approved for more money, their insurances are cheaper, etc.
Now, with the debt ceiling bill going through, if it does, student loans start getting paid back. How is that going to impact Like, has that changed the last couple of years because student loans weren't getting paid back?
Yeah.
Were people able to get more of a mortgage? So now these young kids, now I shouldn't even say young kids, adults
young
now,
adults.
with paying back the mortgage, your student loans, that's going to impact how much they can now qualify for.
It is. It definitely is. And we help a lot of people, guys, in the medical field as far as registered nurses, doctors, dentists, etc. So they all are dealing with student loans, most of them, unfortunately. And they just have programs now where there's different ways to calculate the loan payments going back to them. If they are paying back on them, we can help exercise that to lower it on their debt-to-income ratio to make it easier to qualify. So they're creating more things to make it easier.
Yeah, and I heard that Biden was getting he was signing the debt ceiling. That's already a bill that's already been approved. But then there was a student loan bill that they had to start paying it back. He was going to veto that today, Chris, just so you know.
Oh.
So he was.
Interesting.
Yeah, so stay tuned, right?
Yeah, right.
Stay
yeah.
tuned. And so the phones are ringing like crazy. I know that Chris and I have used you guys several times for products, and when we were getting our new house 5 years ago, you have this wonderful program. And so you were like, okay, that you and Chris are both double on this one credit card. Make sure you just drop off Chris, pay down this credit card to $600-700. So if people are struggling getting pre-qualified for a mortgage after the break, you want to tell us about some things that they could do to make it so they can
Absolutely.
qualify for that house.
That'll be a huge topic to touch
Okay.
on.
Okay, get your questions in, 803-0930, 803-0930, star 930 on your cell phone. And we're going to take a fast break for the news, and we'll catch you on the other side.
We are family. I got all my sisters with me.
And we're back.
We
We got Chris and Tiffany Fabian from EG Tax. Another half an hour to help you with whatever tax needs you may have. We have, starting our summer series, Jesse Myers from Cross State Funding to talk about mortgages and what you can do and what you shouldn't do when you're trying to buy a house.
And then just a little plug on our website. Pretty soon, we're already gearing up for tax school, right, Chris? And we're doing like buy one get two free.
Buy one get one free. So if you want to bring a friend, you save a lot of money and you have a companion to help you.
In tax school.
We have classes from Batavia down to Derby, up to Niagara Falls and Tonawanda online. So we have you covered wherever you are. So.
Yep. Or if you have questions, give us a buzz, 632-7886.
Right. And now we do have a text. I'm a first-time home buyer and just started my job last month. Do I have to wait to get pre-qualified?
Interesting one. And a lot of people in banks are going to think differently on this, but most people usually want to see 6 months to 12 months in that field. But with us, we have lenders where as long as you are full-time and you at least have worked 2 years in the past, just at really any job pretty much, we should be able to make it work for you. So the key and ticket is always you being full-time.
Okay, gotcha. So, what were we going to say,
Sorry.
Chris?
You just said working 2 years.
Yep.
So what we're seeing, a lot of people, I can't get a job.
Right.
There's nothing they can do if they're looking to buy a house, is there?
And now what we can do is, because we just need a consecutive 2-year history within the past, I'm telling you guys, I've gone back sometimes and gotten W-2s tax returns from people in the early 2000s because that's the last time they worked a consecutive 2 years. And that would work, believe it or not.
Oh, my gosh.
Or you have, unfortunately, you guys don't ever want to hear it, but those people that work off the books and the space between, we got to go back to that old W-2 job.
Oh.
Mm-hmm.
That's great that they have that option.
Right.
There's that flexibility. It doesn't close them off.
Well, now, and it's only because nowadays, you guys have been doing this for a very long time. Think about it. You used to be able to pull your transcripts from the IRS website very easily. Now, because you can do it easily for years going back, that's the reason we can, make it work like that.
Right. But the thing is, too, people have to remember, if that was 15 years ago, their income may have only been $30,000.
Right.
Where
right.
If they were actually on the books, their income could be $75,000.
more, yep.
So that would be a lot more,
More
house.
house.
Absolutely, it would be. Absolutely, it would be. So then you have to explain that and, what they were doing in between, because sometimes people ask, but, there's always ways to make it work, hopefully.
So before the break, somebody calling in who's just below that threshold to get a house. What are some things that you guys can do, tools in your tool chest to help them?
Yeah, and this goes along for people who are even qualified maybe now that they get under contract, and maybe there's something we can do to bump their score up a little bit while we're waiting to close on the house. I've had numerous instances, guys, where I'll get someone in at a 700 credit score. The rate will, let's say, be 6.25. Over the next few weeks, we do a couple tricks to get them up, maybe lower that rate into the high fives, save them a few $100 over the year. I mean, it's huge, and you might as well work on it while you're under contract,
Yeah.
But then there's the other side of the coin of people who aren't qualified at all right now, or maybe just have to edit a couple things on their credit in order to get there. We'll help guide you. We'll help show you what needs to be paid off, the cheapest, easiest, and quickest way to get you in that house, or maybe refinance and pay off some debts.
Yeah, really good point. Chris, I can't remember. Gracie and Corey called with a question. Was it about a home inspection or I don't know. Anyways, I'll think about it.
Going back to what you were just saying, saving them, by lowering it. I just did fast math here. If you were able to bring somebody's percentage down and it saved them $75 a month,
Right.
and people are going to go, that's not much. What?
Right.
But over 30 years, that's $47,000.
Yeah, it's huge.
So is it
huge.
worth it to pay it down? Hell yes.
Absolutely,
Sorry.
it is. Yeah,
But
hell yeah, it is. No, you're absolutely right. And people don't see the big picture until you break it down like that. So yeah, we're talking over here just 6.25 going to 5.9 or 5.8. Yeah, but they don't understand how astronomical that figure can get over years.
right.
Which is huge.
Yeah. I mean, and that's, don't want to pick on the younger generation because, the older generation always says these young generations nowadays, as my daughter always says.
Sure.
But they don't understand the concept of money. They don't teach it in school
Right.
anymore.
Right. Yeah, it's a huge missing point that should be brought up. Absolutely. And that's kind of what we help with a lot of our first-time buyers. I mean, we have people that come in that they don't even know what a credit score is, it's so scary sometimes. But, they leave more educated, and our goal with getting their credit up is not just for the house, but it's also for future endeavors, like maybe when they go get a new auto loan, credit card, anything like that. So,
Right. So what would you tell somebody who just is about to graduate? Like, should they go out and get a credit card? Should they, an auto loan? What is the best course to help them get credit? Because they don't even realize they have no credit
Right.
if they don't have anything.
Right. So many people coming out of high school or junior college, they don't have any credit whatsoever. And a lot of times you need it for student loans too. I would encourage anyone to go get a small secure credit card from wherever you bank locally. Even if you don't have a credit score, they'll be able to help you. They'll give you a $500 credit card that just charge gas, some groceries on, and that'll help establish credit for the long run. And I always see when I have like some of my people that just graduating high school or junior college people trying to buy a house, which is becoming more common now, which is awesome. But I always see they have a credit card that's been on their report for 10, 15 years. I'm like, well, there's no way you got that. You must have had a smart parent. And that is what it comes down to.
Or there's fraud out there.
Or fraud, potentially, yes, of course. But, the parent adding the child to the authorized user is also a good trick to help get credit.
No. And
I was wondering, second homes, if people want to get a second home in Florida, you guys also offer that
Yeah.
product for people too.
We do, and
Yeah.
that's becoming, of course, more popular, especially now because as the market heats up here, it's cooling off a little bit going down south just
Okay.
because of the weather. You know what I mean?
Yep, which makes sense. And so a second mortgage, a second home is really a really good option. And then what about people who have a double or who have a duplex? Is that a good way for somebody who's brand new into the housing market to break into the housing market?
Oh, huge.
Yeah.
And I'd say it's the best way. If
Yeah.
you're a first-time home buyer, I can't tell you the first thing that I always encourage my first-time home buyers is, what's your thoughts on looking at a multi-unit to start?
Yeah.
Even if you're not going to live there for a while, you spend a year or so in there, just use that FHA mortgage, do a low down payment of 3.5%, something like that, get a nice double, and then rent it out later.
Mortgage insurance, it doesn't drop off anymore for FHA,
For
right?
FHA,
it's
no.
on there
Yep.
permanently, right?
Unless you put 10% down. That's
Okay,
correct, yeah.
okay.
So FHA always has a mortgage insurance. Conventional is where it drops off once you hit 20% equity.
Okay, gotcha.
Now, we were joking about fraud, but how should people, if they're thinking of buying a house, when should they start pulling a credit on themselves to make sure there's nothing out there that shouldn't be to help them? Or is that something, I know you help people with that, but the average person who go, oh, I just go to my credit union and they take care of everything myself, something like that. But should somebody pull their credit, and how often should they?
Yeah, the apps nowadays, guys, like the Experian app, which is probably the best mobile credit app that you can get. It's not even something you have to necessarily pull your credit to see. It'll do live updates, and they have fraud guard on there too. But your typical credit scores are always going to be a little bit off from what we're seeing as far as your mortgage scores. But I always encourage my clients to just monitor it, even if you're using a simple credit card app like that. It's huge.
Get your calls in, 803-0930, 803-0930, star 930 on your cell.
There is a text. It says, Jesse, do you recommend a home equity to pay off high interest rate credit cards?
Huge question. Home equity lines of credits are becoming much more popular nowadays, guys, mainly because going back a couple of years, people are buying houses at extremely low interest rates, high 2s, low 3s. You don't want to touch those mortgages, refinance them to pay off debt, but you got a lot of equity sitting there that you could use. So that's where the equity line of credit comes in, so you can keep your current mortgage at that good interest rate, pull out some equity at a slightly higher percentage, but not really any closing cost involved. And I can tell you the rates are definitely going to be a heck of a lot lower than your credit cards too. So yes, I highly recommend checking into that. It's a huge option. We've been doing a lot of them for clients.
You guys do home equities?
We do.
Okay.
Yep.
Wasn't there a time when you didn't offer that product?
Yes, there was. Actually, about mid-2022, a lot of our banks started releasing home equity line of credits because of mainly what I was saying. Yep.
That's good to know.
Yep. So
I can start forwarding those to you guys.
Yes. Yeah. Please do. Yeah, please do.
What is the minimum credit score for a home equity?
So home equity is going to be a little bit higher than our standard mortgage.
Right.
Standard mortgage, we don't have a credit score minimum. Home equity, we want to see at least a 640.
Okay.
And if you're not there, we can help get you there. So,
yeah.
Of course.
Which is great. Were you going to say something, Chris?
I know you started mentioning earlier, Tiff, about helping people with their credit, and you said it again. What do you mean by helping? How can you improve somebody's credit?
And sometimes improving the credit, it's something that they're not even aware of, could be missed. We'll dive deep into maybe old credit card lates, settling credit card charge-offs, little collections. You might have an old Time Warner or National Grid collection for $100, $200 that could be preventing you from getting a new credit card or house, and you don't even know about it. So we just kind of dissect everything and dig deeper than the regular credit card apps you'd see.
Yeah. And then are there, I was just helping a client the other day because I do lots of offers and compromises. Are there still programs out there because of COVID where people are late paying their mortgage because they can't afford it? Are mortgage companies still pretty hesitant to pull any plugs, like to, call back the house and foreclose and things like that?
Yeah, and we're kind of at the end lines of those, but we definitely are still seeing those a little bit here and there, Tiff.
That's good.
As long as you're pretty much past and you've made 6 payments on time after your mortgage forbearance or whenever you were in it for COVID, generally speaking, you're in good shape. A lot of the times, if some people aren't at that level, they'll sell their house and maybe get a new one. That also ends it.
Yep. Yeah, I know Esther was advising a friend. He has a beautiful house, I think, on the coast somewhere, and he can't afford it. And she's like, sell it and go get a before they foreclose, and then you got nothing.
Right. Yeah. Don't tarnish your credit because you can't afford it and miss payments, especially if you got equity sitting there. Yeah. Go ahead, flip it, sell it, go downsize, get something else.
That's right.
Okay. Well, Chris Fabian, Tiffany Fabian from EG Tax, Jesse from Cross State Funding. We're going to take a short break, and we'll catch you on the other side.
We are family. I got all my sisters with me.
And you are. We are all family. We all have to pay taxes, all have to pay a mortgage, you know.
Oh, we do. We do.
Yes, COVID's over. We have to pay our mortgages again. But
Pay our rent.
yes, Chris and Tiffany Fabian here from EG Tax, here to help you with whatever tax needs you have. We got another about 12 minutes left in the show. We do have Jesse here from Cross State Funding. He's a great resource to have. And how do people get a hold of you during the week, Jesse?
Yeah, best way, guys, is either on our website, crossstatefunding.com, where you can do an easy application on there, or just call into our office, 716-691-7000. Super easy to remember.
I'm glad you guys are doing home equities again, because
Yeah.
I remember there was a time you weren't doing them. So
Right.
for any listener out there, if you're strapped with high interest, or even people who I do offers and compromise have credit card, IRS debt, New York State debt, a home equity. Now I can start sending them to you guys. I had no idea you were doing home equities.
Yeah, just
because
pretty recent.
people are just strangled with this debt, and so it could bring down their monthly payments, which would be huge.
Right.
Yeah.
Yeah, I'll give you a quick example of
Yeah.
one that a lot of people wouldn't think is possible, and I just signed the client in last week. He's unfortunately not working, but he has 6 rental properties that all do pretty well. Okay, so one of his rental properties he had sitting on about $150,000 in equity.
Right.
He has a $90,000 loan balance, good interest rate. So we were able to help him get an equity line of credit on that one to go buy another rental property.
Wow.
So
Those are his money makers.
Exactly.
That's how he earns his income.
That's how he earns his income right there. Yep.
Yeah. So great option. I'm so glad you guys opened the door on that.
Yeah.
That's really good. I love helping people who are just held up with financial struggles, and so a home equity is just another tool in their toolbox. And like you said, there's hardly any closing cost. So is it that the bank deals with the closing cost, or how does that there's no?
Yeah, the line of credit closing costs, they're just super cheap because they're not
Okay.
a standard mortgage product.
Okay.
So you're not paying all those taxes, fees, things
Okay.
like that. Generally speaking, on a line of credit, you're going to pay a % or 2 when you're opening it, which in hindsight really is not much.
No.
And people do not realize the difference in their credit card percentage, their APRs,
Yeah.
compared to the line of credit.
Yep, absolutely.
Your guys' credit cards, even if you have excellent credit, you got all those good promotions, anything like that, they're going to be sitting anywhere from on the low end, 13%, sometimes all the way up to 30%.
Yeah, and then the nice thing is if they pay off that credit card debt, it can increase their credit
It's
score.
gonna skyrocket.
Yeah,
Yeah, it's
their
gonna
credit score is
skyrocket.
going to be better than when they go to get a car loan
Yep.
or pay for. I think insurance. They look at your credit score. There's so many things that are indicative of looking at your credit card score.
Absolutely.
I know we always, people are, I want to take the money out of our pension to pay off the credit cards before I retire because
my
I don't
goodness.
want to be in debt. But actually, if you're going to, it could cost you it could cost you $30,000 in taxes between the federal and the state.
Right.
I mean, it shouldn't. I mean, everybody would love to be debt free, but to pay $30,000 in taxes or $400 a month.
Right. Yeah, pulling it out early when it wouldn't be the wisest option.
Sometimes
Absolutely.
Esther says defer, die.
And then all that money you're pulling out, home equity line or cash out refinance, is all tax free.
Right. We're going to go to the phones and talk to Ed. Hey, Ed, how can we help you?
Hi. When you're calculating, when you're answering the question, will I have to pay taxes on my Social Security withdrawals? Does Roth IRA withdrawals come into that?
No, they don't.
They don't count at all.
As long as you have had them for the last 2 out of 5 years.
If you had it for 5 years.
Yeah.
Right. Okay. And then, do you ever pay Social Security taxes for the state?
No.
Nope. Social Security's tax free on New York.
New York
return.
State is kind to retirees.
That's good.
It's really good.
They try.
They
try to be.
they try to be. $20,000 of your pension or IRA for your spouse and yourself is not taxable, nor is the Social Security. It's all backed away on the state.
Nice.
Yes.
Okay.
Okay. Well,
Good
thank you.
question.
Have a good weekend, Ed.
Tthank you. Bye.
Bye-bye. And we got another text, and then we'll go to Mike. I have a 689 credit score and just got a 7.75% at my local bank. Won't mention who, but is this a good rate? Should I check elsewhere?
I can encourage you to, yes, please check elsewhere. And I know exactly which banks are giving those high sevens right now too. But that credit score, even if you're FHA or conventional, even VA, the three main loan products, you really should be somewhere in the mid to high sixes, if not lower than that. So
shop around.
Definitely shop around. Give us a call. We'll help take care of you.
I mean, and that's an issue I see with a lot of people. They get locked into one place.
Right.
And I trust everything. They would never do anything bad to me.
And then people always are like, "Oh, but you're going to take a hit on my credit if I go to another place."
Right. In the grand scheme of things, we'll get you a full % lower, probably save you a few $100 a month. It's
So
like, how could you not?
Don't worry about
and
it.
how, like Tiff just said, if they went to, and I'm going to use old banks, Gold Dome.
Yep. Okay.
And they ran a credit report, and then they went to Big E.
Yeah.
They call it a soft pull or something
It
like
is.
that.
And there's mortgage forgiveness on credit pulls too.
Okay.
So that doesn't have an impact.
No, when you're doing them in a strand, if you had KeyBank run their score, then M&T, then Citizens, and then we run it, I should be showing the same score that KeyBank did the first credit pull. Well, there's ones in between too.
Okay.
So
Okay.
yeah,
Good.
no harm.
Good. Okay, let's go to Mike in Tonawanda. Hey, Mike.
Hi. A friend of mine was saying that the rules for selling homes have changed. Is it still that you have to live in it for two out of the last 5 years, and then there was a certain limit on that? Can you help me with that?
Yep, the rules have not changed. It's still 2 out of the last 5 years. If you're a single person, you don't have to worry about the gain if it's less than $250,000. If you're a married person, it's $500,000, $500,000. So to answer your question, you win the bet. I think the rules have not changed, Mike.
Okay. Thank you very much.
You're welcome. Yeah, Esther.
Yeah, and that's for
Esther
capital gains too. So
has
people
always
understand.
had fun with real estate. She
is never attached to a house.
She's never attached to a house. And so if there's profit to be had in her personal house out of 2 out of the last 5 years, she is ready to move on to the next house.
Flip it, get a different
She
one.
even sells her furniture.
Yeah.
That's awesome.
Yep. And in Florida, we go visit her sometimes and we're like, okay, so the next time we come, will she be in this house?
Where are you going to be?
Yeah.
But, it makes sense. I mean, if you can do it and you can make $200,000 tax-free,
Right.
why not?
Right. I mean, you could be doing that in multi-units. Esther's doing it in single-family nice homes, I'm sure. But imagine doing that in 2 to 4 units where you're
That's
not
right.
only gaining that equity, but you're using the renters of the sides you're not living in to pay for your mortgage.
That's right.
You're essentially just creating free money.
Yeah.
So
Yeah, it's sort of like, and the guy who's not working right now who got a home equity to get another double, very smart.
Exactly.
Very smart.
That guy has pristine credit.
He's
and,
his own
yeah,
boss.
he's his own boss,
Yeah.
does everything on his own. Yeah.
Now, with rental properties, is there a limit on how many mortgages a rental like that client you had could have? Like, say he worked and he had worked for National Grid.
Yep.
So, is there a limit on how many mortgages he can have?
Very, very good question. And up until this point, there was a pretty strict limit. Conventional loans, which is what most rental loans are going to be in, your limit is 10 conventional loans.
Mm-hmm.
Okay. Now, we have a very unique and popular product right now called a DSCR loan, which is just a debt coverage ratio loan. As long as the rental income from the property you're buying exceeds the projected mortgage payment, which 99 times out of 100 it will.
Yeah, well,
or
with the
why
rents
would-
nowadays.
Why else would you be buying it? There is no limit on those. So I have a client right now. I'm helping him on his 16th DSCR product.
Wow.
Yes, and he's and that's all in a matter of just a couple of years. So he's loving it and just buying.
Wow. Well, that guy hopefully has lots of insurance, right, Chris? I'm just thinking of his taxes.
Yeah. One set place.
Yeah.
Does all his insurance.
Yeah.
Or at least have some LLCs mixed in
That's
there.
the biggest thing. Yep.
Yeah.
Which we can also do now too, Tiff, and with the home equity lines, we've been closing a lot of LLC loans. So
Okay.
Oh, wow.
dipping into a commercial side of things like that.
That's cool. Yeah, because I know I've called you about some commercial loans before for people, and a lot of times you guys were farming them out, but you're doing
Yes.
some of them in house now.
Yep.
Okay.
And if it's something we can't do, we have people that can pretty much finance anything under the sun. So
That's great.
we'll be able to help everybody.
Lots of good options, right?
Yep. Now, what do you see in the future for mortgage rates?
Around here.
Yeah.
Or anywhere, I guess.
Absolutely. Hoping for a good trickle down heading into fall. That's everything I've been reading, researching, that we should see a few drops heading into fall, then winter, and then hopefully 2024. Of course, re-election happens. There's always changes in rates.
And then you mentioned that the housing market is still not so good in Western New York, but Florida's
Right.
freeing up a little bit.
Right.
Do you see Western New York freeing up a little bit?
Hoping for it.
supply.
Right now, we're having a little bit of an inventory crisis, even though right now in the last few months we currently have some of the best inventory that we've had.
Yeah.
We just need people to really start focusing on selling their houses and doing what we're saying here, flipping that equity. Probably the most common thing, guys, that I was not expecting heading into this year are people that are downsizing. That's one of the biggest things that I've been seeing.
Okay.
Yeah.
Well, why don't you give your phone number and your website one more time?
Yeah, it's Jesse Meyer, and I'm vice president with Cross State Funding. Our website is simple. It's just crossstatefunding.com. Easy application access on there for anyone looking to purchase, refi, or home equity line of credit like we were talking about. And then our phone number is 716-691-7000.
Wow, I can't wait that you guys do home equities.
Yeah, they're awesome.
Very, very good product for my people who owe money and don't know how to get out from underneath it, you know?
Yeah, absolutely. Yep.
Okay. Well, thank you, Jesse, for coming on air. We'll probably see you again before
Thank
the
you,
year
guys.
ends.
Absolutely.
Chris Fabian, Tiffany Fabian from EG Tax. Next weekend, our summer series continues with Brian Faraci talking about health insurance. Always a great topic there. But if you need us during the week, 716-632-7886, egtax.com. If you need us to help you get in touch with Jesse, we can do that too. Until next weekend, stay safe and be warm this week. I guess it's supposed to be dropped down even cooler now.
It is.
So see you then.
Cheers, guys.